Well, hi, everyone. I'm Daniel Williams, Senior Editor at MGMA and host of the MGMA Podcast Network. We are back with another Business Solutions podcast today, and we have a returning guest, Claude Royster. He is Vice President and General Manager of Health and Wellness at CareCredit. We've had Claude on podcasts, webinars. We've had him at all kinds of events. So, Claude, welcome back.
Daniel, thank you for having me. It's good to see you again. I think I saw you a couple weeks ago, and here we are again. So great to see you.
It is really good to see you again. So for people who may not know you, you and I were talking offline. I didn't realize a couple of things. One, that you're in the Chicago area, and two, that you're a true road warrior. Maybe not Mad Max road warrior, but you're on the road a lot. So tell us a little bit about that. What your life is like at CareCredit. Tell us about that experience.
Absolutely. So my responsibilities are I am the general manager and provide oversight for our wellness business. And in the wellness space, it consists of over 45 different industries, anywhere from chiro to your various physicians, specialized physicians, and also in the durable medical equipment. So very, very diverse space within the healthcare ecosphere. And really the purpose of me spending a lot of time on the road is really to spend time with, physicians, our providers, our partners, and both prospects and existing partners to really learn more about the industry and how our CareCredit products can assist with a practice or provide a network to be able to help them grow their revenue, reduce some of their expense, et cetera, and really educate patients on the importance of optionality when it comes to their healthcare. So I spend quite a bit of time at conferences, trade shows, obviously being part of MGMA, but really just trying to meet with the partners, constituents, as well as really try to educate and learn from them on how we can make our products better, which in turn will help their practices and their facilities with both provider experience and patient outcomes.
Yeah. I think in one of the other podcasts when we had you on, I actually shared with you at our primary care physician, I knew of CareCredit before I knew of MGMA. I would see a CareCredit sticker, and I'd go in and fill out the info. So for anybody who's listening, who's an MGMA member, just share with us, just in case they don't know what CareCredit does. Just give us a little snapshot of what you guys do with practices.
Absolutely. So to do that, I'll just kind of give a very, very quick history of CareCredit. So we started in the dental space 35 years ago, and really trying to offer financial options for the dental network. And in those 35 years, we have grown to, again, over close to 50 different industries. We have 260,000 providers within our CareCredit network. And our goal is really to be able to allow practices and patients have a financial discussion around how they're going to pay for the care that they need. As we know, insurance costs are going up, and the premiums and out-of-pocket costs for patients are going up. So we have continued to work towards educating both patients and providers, but also really give products that give that optionality to patients to be able to make choices now and get the care that they need where they need it. So we have continued to grow. We've expanded beyond just a CareCredit credit card. We now have loan products that, for some of the larger ticket procedures, we have the ability to complement those as well. So the installment is really a complement to what we do today within our network of CareCredit.
Okay. Thanks for putting that in, context for us. So let's talk about the patient side of it, because, our listeners are the practice leaders. They are working with patients. They want to get paid, so you guys are helping facilitate that. So What I had seen in doing a little research, some of the information y'all had shared with me, that the annual deductibles and FSA resets are on the horizon. Tell us in context of what that means to patients so they can best pay those bills that they get from the practices.
Absolutely. So every year, we go through what is called deductible reset. So that is where your insurance basically restarts. This is a time right now where individuals are selecting their insurance for the individual or the families. January 1st is when those typically will reset. And what that simply means is that um, you will now have to pay whatever your deductible is for your particular plan, as well as any particular co-pays or any premiums that are part of your insurance plan that you select. Once you, and what that essentially means for the patient is the patient will have to pay the expense until they meet that deductible. And that's when your insurance begins to kick in and they will cover a percentage of that cost of any procedure. So, um, if you think about that at the beginning of the year, it becomes a little bit more expensive to the patient, particularly those that need to have care earlier on in a calendar year, because they have to meet those deductibles before the insurance comes in. And, some of those are, maybe 500, but it can go up to the thousands. And, those are expenses that families or individuals may or may not plan for. So,
Mm-hmm.
if you have an FSA or an HSA, they can certainly help cover some of that cost. But if it gets above what you have saved in those particular plans, then you have to have, obviously, reserve or a way to be able to pay for the care that you need. And that's where it's important for us to educate patients to really understand what it means when their deductibles reset. You can still get the care that you need now, leveraging care credit, to be able to finance that care that you need over a period of time, making it more affordable, paying monthly, but also being able to pay over time and potentially taking advantage of some of our promotional offerings where if you pay that, you really don't have to pay any interest if you're paying within the promotional period. So we're giving people optionality, we're giving patients optionality, making it more affordable for them. And we're really trying to do that in a simplified, frictionless way so that they can focus more on the care and not so much on the financial portion of what they would be owing as a result of that care.
Okay. Now, MGMA partnered with Care Credit years ago on a research project. I can't remember if you were involved in that, but it was really honing in on that patient financial experience. So let's think about it in context of that. The patient financial experience. What role does the medical practice play then in educating the patient on what their options are? Is that a role that you at Care Credit is playing where you are working with the patient directly? Or is there something where the practice, the people who are listening right now, where they can be better equipped to really educate them? And the reason I ask this is we've seen studies where people who need care the most, they may feel like, well, I can't pay for this. And so they push off getting care until it's well down the road, and then it's way more expensive. So talk about that whole journey there and perhaps the role that either Care Credit and or the medical practice can do to help educate those patients so they know there are options for them.
Absolutely. So I'll start with the patient first because you touched on a point that is I think is very important in really trying to help patients understand the lifetime cost of care, and that's the study that you're likely referring to. We periodically will go out and get information or data points on patient behavior and their understanding of one the healthcare system, but also the cost. And in many cases, patients grossly underestimate the amount of cost that they're paying for care that they need. Many assume that they're paying, example, one of the learnings that we gained from this study is most families estimate that their out-of-pocket costs are roughly around $850 a year, when in fact they're closer to 2,200. So you're thinking their
Wow.
costs are almost double. And when you think about that over a lifetime, you're talking about $70,000 to $80,000 worth of healthcare expense that many have not reserved for or set aside monies to be able to take care of those expenses. So that is an added burden to individuals or families that need to get care now, as opposed to postponing or delaying care. Our responsibility, I believe, is twofold. Our responsibility is to continue to educate patients, but also educate providers and also provide them with tools that they need to have that financial conversation with the patient. So, for the patient, we do a lot of communication via digital, where we can actually share some of the information, some data points that I've shared with you on not only some of the realities of healthcare costs, but also some of the options that patients have in order to start planning ahead for any future medical or healthcare needs that they have. And one of the things that I think is probably first and foremost is for those that are employed and have insurance. I think it's important to understand the explanation of benefits. Many people get that in the mail and
Yeah.
they don't really understand what it means. And so, really trying to take the time to understand what that means, how it impacts you from a financial perspective, understanding something as simple as what is in network versus out of network.
Right.
Those things are grossly important because they can change how much you have to pay as an individual or as a family, and that makes all the difference in decisions that patients have to make in getting the care that they need. From a provider perspective, we want to make sure that they understand the various tools to be able to take the friction out of a patient having to decide to have care now or postpone because the sticker shock of how
Yeah.
much it's going to cost them to get the care that they need. In many cases, these are emergency situations. These are not situations where a lot of it's elective. But if you break an ankle, snap an ankle, or dislocate your shoulder, you need to have procedure now. You don't
Yeah.
want to deal with that pain.
Right.
So, having the ability to understand what your options are and not delaying that care are extremely important. So we continue to provide our providers with information on how to have the financial conversation, when to have the financial
Right.
conversation, making it frictionless, explaining to them how to sell it in the framework of payments per month as opposed to the total, because now a patient can compartmentalize that, and then now it's no longer daunting when instead of $2,000 you're able to pay that over time or $50 a month. Much 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 more able to absorb that in this and in your budget versus a $2,000 bill. So those are the things that we try to do to educate providers and how we educate patients on the importance of understanding financing, as it relates to getting care that you need.
Okay. Can you give us an idea then of what that conversation looks like? The one that you have, say, with the practice, so they are well equipped to have that further conversation with the patient.
Absolutely. But first and foremost, I want the practices to understand what's in it for them,
Okay.
as well as the patient. So from the benefits to the provider are, you get to focus more on um, care delivery. You get to focus on the procedure, the patient, and the outcome. By having those conversations up front, particularly, if you think about an elective, they have to decide when they're going to schedule their appointment, when they're going to go in and have a procedure done. In many cases, you can have that conversation up front. And so what we educate providers on is trying to have that conversation earlier, sooner than later. And we will basically educate them on our value prop, which is promotional financing. So again, as well as the process, it takes seconds for a consumer to pre-qualify for our product. And that can be done in a variety of different ways, whether it's a paper application, whether it's electronically or digitally, right on their phone. It all happens in seconds. So they will know within seconds what they qualify for. So knowing that you qualify for X line of credit, as well as knowing that your bill is going to be $2,000 and you have a way to pay for that,
Right.
is going to be instrumental. The provider, the benefit to them is that they're going to, upon processing that transaction, they will get their money within 2 to 3 business days. So if you think about revenue and cash source for that provider, they're getting paid right away. It's a non-recourse program, so we do the collection. They get to focus on the patient. And in many cases, providers will, if they don't have optionality, some of them will finance in-house. You think about that. That's, they are taking on receivable for those patients. We're a bank. We lend money. So, that eats up at your capital. So to have the ability for us to be your bank and help your patients get financing and the care that they need is going to lessen that receivable that you have to take on your book, and you allow us to do that, which is freeing up your capital to focus on staffing, some of the other administrative costs associated with doing business in the healthcare space.
Okay. You have used a phrase several times, frictionless. I've heard it and experienced it when I go to Starbucks and get a tea or a coffee. I'll just have the app, I'll just scan it, whatever. For care credit and for these practices, what does that frictionless experience look like for patients?
Yeah. So, I mentioned a little bit about the application process. So, and it's really just more of a digital journey. So, starting with the application process, again, at your fingertips on your phone, we have what we call QR codes and our providers. So the provider can provide the patient with a QR code, and once they scan that, it immediately takes them to our application process where they can pre-qualify within seconds. And once they do that, now the patient can decide if they want to go forward. And by the way, when you do that pre-qualification, it does not put a inquiry on your bureau. It is a soft inquiry where we're going out, we're looking at certain information, and we can decide, okay, this individual pre-qualifies for X dollars. Once you move forward with the application, then we will actually pull your credit bureau, and you will be approved for the line of credit. But again, the frictionlessness comes in where all of this is being done within seconds. This is I remember, I'm probably dating myself, but years ago, it used to take an hour to get a decision back. Now it takes seconds to be able to get that information back to you. And again, taking that decisioning out of play, because now you have the comfort of knowing you have a way to be able to pay for the care that you need now, so you don't have to postpone or delay. And it makes it affordable because you get to take advantage of the bow props that are bow props with promotional financing that allow you to get the care now, be able to pay over time, and the cost of credit, if you pay it in full, is zero. You didn't pay any interest.
Wow. Okay. In the remaining time, I'd like to dig into how we measure this. Like you've seen it in place. So what are the KPIs that you're studying to see that it's working, that you can share it with other practices to show this is prior to using this frictionless process, or these prior to using these different tools and applications? This is post doing that, whether you want to share with patient satisfaction, with revenue being brought in, where do you want to start and walk us through that part of it?
Yeah, I think you hit on the first two. The first being patient satisfaction.
Mm-hmm.
I think that's extremely important. A lot of smaller entrepreneurial practices, a lot of their patients come via referral, and so having a good experience is critical for those practices. So That's first and foremost. When we talk about the practice, we obviously want that practice to grow. We want to be able to find ways to leverage our products to help them grow revenue or their bottom line. We also, and we do that either through the revenue or we can actually reduce their expenses. If you think about the amount of time it takes to go through some of the rigorous paperwork that they need to, filing claims, refiling claims, going through those processes and handling the rejections and all the other paperwork. We're trying to streamline that so that, at least from a financial perspective, you don't have to do a lot of that. So the amount of time that we're trying to give back so that they can focus on a patient, that time is money. That time is an expense reduction. When you think about, on the back end, if they are doing inpatient financing, you still have to collect that. These are doctors and office administrators. They're not bill collectors. So giving us the opportunity to allow those patients to get financing relieves them of having to collect on those receivables or even outsourcing that to early out or third party vendor that you have to pay a fee to collect on that. So those are ways that we try to measure. I try to measure again based on the revenue, based on expense reduction, even something as subjective as provider employer satisfaction. Providers are stressed. Health systems are stressed. Many are understaffed. So being able to free up some of that capital to maybe invest in maybe getting additional staff to be able to help support and take care of patients, that's what we strive to do. We're a partner. We're not just a bank, we're a partner, and we want to be able to help our partners grow, be prosperous, but most importantly, help patients.
Okay. Final thing then, is there anything I didn't ask that you want to share about work that y'all are doing, anything about patient behavior, anything else you want to share in a final comment here?
Yeah, I think, we have a broad array of information for both providers and patients and for Care Credit. So I would encourage it, if there are any providers, existing or not, that have an interest in learning more about Care Credit or learning about some of the studies that we have actually accumulated, please go out to www.carecredit.com. You can go out and see all the different information that we have to share. It is both provider friendly as well as patient friendly. So there's a lot of good information out there. You can contact us if there's something that we don't have, if there's an industry that, a doctor is affiliated with that we're not potentially participating in. That's how we find these industry opportunities. And so I would encourage you to go out to www.carecredit.com.
All right, perfect. Well, Claude, thanks again for joining us on the podcast.
Thank you. Thank you for having me. It's good to see you.
All right, that is going to do it for this episode of Business Solutions Podcast. We've been joined by Claude Royster, Vice President and General Manager of Health and Wellness at Care Credit. And as Claude said, we're going to provide some resources and links with additional information in both our episode show notes. And as many of you may know, we turn these conversations into articles on MGMA.com as well and bring in the key points and takeaways there. So you can find it there as well. So until then, thanks everybody for being MGMA podcast listeners.